Hello, everybody. There is so much good stuff happening right now in crypto. It was a nobody's bingo card. I mean, from the regulation to the governments to the treasuries to the reserves to the price targets to the stacking to the price predictions. And of course, what everybody thought was dead is not. That's called AltSeason. It's very much alive. I'm going to break all that down today. Thank you to the team who've joined me today. And remember, links below for everybody's channels. We're streaming on everybody's channels to get the word out because this is, as Mando said, this is the all-in pod of crypto. DCA Live. How are you all today, Mando? Mr. Purple, all good in the hood?
I'm doing great. Yeah. Obviously smashing through recent resistance in a bunch of different altcoins. It does feel as though risk taking has really increased since Thursday, Friday of last week. People are really grabbing for different bits of the market. I'm still pretty bullish. I think we might see a little bit of retracement, but the trend does seem to be that people are going to FOMO into alts for a little bit longer, I think, here.
Yeah, awesome. I don't know if that beeping is on my side or somebody else's side, but hopefully not. CTO, how are you this fine morning? Loving the charts?
Absolutely fantastic. I have a lot of charts. I'm very happy. This is it, guys.
I don't know what the crazy beeping noise is. Can anybody hear it?
I don't hear any beeping.
Oh, good. Okay. I think it's a truck outside going backwards. Anyhow, Marty, back from your travels. You made it in one piece.
Yeah, I had a great trip, 2 weeks to Asia, talking to a bunch of institutions, caught up with the family. It was crazy. I'm pretty jet lagged, but I'm back, and looks like everything went to plan. We did the markup on the Wyckoff. We're on our way. Global liquidity is leading us up. I'd say we got a next stop 125. Consolidation there for a sec, then 140, then consolidation there and a reaccumulation, I think, till November. Global liquidity's got us at around 156 at the top for the next leg.
So there we go. We got some pretty aggressive price predictions and some crazy action happening. But let's jump into, the agenda is long, but I'm just going to talk briefly about a couple of items, then we'll look at a couple of charts, and then we'll come back to a ton more items. First of all, Michael Saylor came out, and I'll just lay the groundwork for a little bit of Bitcoin, get that out of the way. But he says how to 100x your money. And in the year 2045, which is 20 years from now, Bitcoin will be worth $13 million a pop. And every Bitcoin that you don't buy is a $13 million cost. He mentioned this a few times. That's big. Then he buys a ton more, and he ATM'd the stock. That was pretty clear from the chart last week. He's buying 6,220 more. They now own 4% of all Bitcoin. And that assumes a lot is lost, which 5 million is lost. And Novogratz, we'll talk more about Galaxy Digital as well. He said, CNBS, Bitcoin will replace gold and go to $1 million. So what do you make of all of this crazy bullishness? I mean, the hyperbolic targets that are being pumped out there in the media, is it getting the attention of investors? Marty, you mentioned a post about Schwab, which we'll come to in a minute too. What do you think?
I remain extremely bullish. I think that we're going through a massive transfer of wealth, and we all know, we've been speaking for over a year now, that digital economy is coming, digital monetary system, digital fiscal policy, it's all coming, and Trump's led the way. But at the end of the day, it's all about liquidity. And crypto is a different asset class. People are coming around to that. It's not a stock. Although stocks will have the same run, crypto is a liquidity sponge. And global liquidity is flying, and it's not stopping. And we just about have a sovereign debt crisis. We haven't printed new money since 2020. We haven't had rate cuts. It's all coming, guys. There's going to be the biggest QE in history, I believe. And crypto will just follow it.
Yeah, QE has actually been happening in a stealth manner.
Exactly. I mean, a real QE, where the Fed actually turns around and says, we will end QT and begin QE. Just remember, institutions front run that. They don't wait for Jerome Powell to say that. Yeah, they front run it, and that's what we're seeing.
Mando, what do you make of the climate? We're midsummer right now, and things are kicking off. Normally, summers are quiet. What's going on?
Yeah, I mean, the whole sell in May thing got destroyed, didn't it?
Which you said it would, by the way.
I was speaking to some people. I've been in London for the last couple of weeks, and I did meet some people from TradFi, and a few of them did say, "Oh, is Bitcoin going to $1 million?" And I was like, "Wow, okay, so that price target is permeating into broader TradFi a little bit here." I think the key thing right now is to focus on, because the main thing that's changed over the last couple of weeks has been this mini altcoin season. But don't buy trash, because Bitcoin has got an incredible narrative behind it still. And this is a sort of time in the market where you get, sometimes the amount of time you spend online or researching can make you FOMO into bad trades. I still think there's obviously going to be some very good altcoin trades here, but just know that Bitcoin will continue to go higher, and there may be a point in the next month, 2 months, where your altcoin tops and then maybe never kind of comes back again, like particularly if you're going well down the risk spectrum. So this story for Bitcoin is unbelievable. It's like every single Bitcoin that they buy, no one else is going to buy them again. Like they're holding them in like forever style vehicles. So like that is Bitcoin that almost nobody will ever touch again, and it's being bought by thousands each day. So I think just know how strong the case is for Bitcoin. There's been a lot of like Bitcoin's top for the cycle, or it's not the thing to own right now. There'll be a point in time, in whether it's 1 month, 3 months, 6 months, that you'll be so happy that you own Bitcoin over everything else. And I think just remember that it's not that Bitcoin's going to go lower here, or materially lower, let's say. It's just that there's a bit of a rel-val trade here where people are FOMOing in.
Yeah, very interesting. CTO, lots of crazy price targets, lots of crazy action. Novogratz buying 80,000 from an old wallet to 80,000 Bitcoin. What do you see in your crystal ball?
Oh, yeah. So we have a lot of things to cover. The most striking thing, exactly like all of you said and like Mando said here, is this. This is Bitcoin dominance. Remember how many people who said on social media that there will never be another AltSeason because money is in ETFs now and it can't be easily moved over to the altcoins like in the old days when it was in exchanges. Remember all that? I remember we were here, all of us, saying that, yeah, actually, we don't perhaps agree with that. And if this is not an AltSeason, then what is? This, the uptrend channel broke, and, this straight line that has been going on for so long, it broke, and Bitcoin dominance just fell off a cliff. And we saw the signs earlier. Remember this, guys. We had it here. See if TradingView would like to load. We talked about this volume peak in Ethereum. That was back in May. If you guys who are regular listeners here and remember that far back in time, we talked about it here in May, that suddenly there was a huge volume peak in Ethereum. Someone was buying and accumulating here, that's for sure, and it got this big breakout after that. We talked about it then not so much happened, then another level established itself, and that broke out this Tuesday, or last week Tuesday, and again it shot up. So this is the ETH to BTC. Again, it's often easier to see what is going on by looking at the altcoin versus BTC chart. Then you kind of isolate the Bitcoin versus USD movements, and you can see in more clarity what is actually happening with the asset as such. So even though Ethereum had all these issues with, it's slow, it's expensive, it's fragmented with L2s and so on, well, someone was buying here and probably intending to get the price up. And that's what has happened now. And why that is important is that it gives hope for all the other altcoins. Like if Ethereum can move, okay, then everything else can move also. And it kind of typically comes later. First Bitcoin moves, then Ethereum moves, then the number 3, number 4, number 10, and then the longer tail moves as well. And that's what we're seeing now. Basically, everything is going up. And I know a lot of people here are interested in Solana, which I think it started moving as well. We chatted about it a little bit yesterday, right? On the USD chart for Solana, this was the key level. Support here held back in June at 126. The key resistance on the USD chart was here. I have it 186.7, 107. That is breaking out today. On the SOL to BTC chart, we kind of established these bottom patterns here, and we're moving up on the SOL to BTC chart as well. And basically every single altcoin almost is moving up. Like substance or not, it doesn't matter. You know, XRP is moving up. It doesn't matter what coin it is. LTC, I don't know if there's anyone using that for anything. Doesn't matter. Everything moves in situation like this. And it doesn't move little, it moves massively after the breakout levels. Here was XRP versus BTC. You can see the same thing as well. Clear horizontal level, after it breaks, boom, shoots up massively. And that is what we're seeing. And I think that, coming back to your question also from the beginning, James, like, I think that a lot of people feel that Bitcoin is safely above the breakout level. So the worry here that, you know, what if Bitcoin dumps badly? I don't think that's so prominent in the market now, because this is so strong. The trend is up on every possible time frame. The breakout is holding. There's like bullish chart construction. This was a flag we talked about. It broke out. It's only positive signals everywhere. And then people start talking about how high will it go? Will it go to 1 million? How do we increase the risk? Oh no, we missed some of this move. How can we, you know, increase risk to catch up? Okay, let's buy altcoins. Let's, go further out the risk curve to try to catch up. And how high will Bitcoin go? So I think that's where we are now. People feel confident in Bitcoin. They want to make even more money faster. And that's where we are now. And I'm very happy that we have kind of talked about that here on the show for quite a long time. And now it's actually happening. So
yeah, and there's no doubt there was a lot of, like, we had a bear market in alts. I have a theory that Tom Lee is now the chief marketing officer of Ethereum. We should change his name to Vitalik Lee. Him coming out and being all over the media all the time, every day, talking about Ethereum and being the chairman of BitMine and all that type of stuff, and then bagging a lot, he's got the ear of TradFi. And my question to Mando is, did you know about that a month ago?
No, but I think Ethereum has done one of the best marketing turnarounds I've seen in many, many months. And that's kind of what I was picking up on when I got more bullish on it. You were starting to see, I thought we'd start to see treasury companies come through. And I thought we'd get the staking ETF. Those are the two things that I felt were going to be the trade. At the same time, you saw a slight softening of the foundation. Remember, they started to be a bit more active. They changed around the management. You had people like Vitalik, who is pretty I wouldn't say anti-business, but like, he's shied away from a lot of the applications on ETH. He is up there with the CEO of Robinhood at a conference in Cannes, like quite a glitzy conference in Cannes. You would not see Vitalik at one of those events dead, two years ago. Like, you've seen a shift to a more, let's say, business-friendly mindset from the foundation. And then you started to see big ETF inflows. So that's what I was just reading through, which is that TradFi want to pump this. They're going to put on the trade, and now if the ETH Foundation says anything, they're going to pump it. And now they've got people that the broader financial world knows in Tom Lee and Joe Lubin to be the new faces. Like when you used to talk about crypto on CNBC, they'd normally get a Bitcoiner on, right?
Yeah.
Now they've got these two new people they can bring on, and they can be the face of whatever narrative it can be. So like, they can push ETH, and they're a bit more. Before it was just Saylor, or it was maybe like Jack Marler or something like that. Now they've got these two new faces now they can bring up, and it's. I think it's going to be. This is not something that I think is going to stop. I'm of the view that ETH will continue. I think it's going to hit all-time high by the end of this.
In fact, Tom Lee, that's a great point, actually, Mando, about Vitalik. He is a little bit alien-like. He wouldn't really belong on CNBC. No. So you're dead right there. But Tom Lee came out and he said, yep, we're going to 4,000 and then we're going to 40,000. this is reminiscent of 2021 when a joint friend of ours said 40,000 is on the cards. Insane stuff. But let's take a step back. Marty, all of this crazy action with TradFi embracing things like Ethereum, it's the second largest coin. They think it's a safe place to go. How much of this is tied into all the regulation, like the Clarity Act, the Genius Act, all that type of stuff? Is that adding fuel to the fire as well, Marty?
Yeah, I'm not. I don't really agree with a lot of what I just heard. I think that I don't believe in the altcoin narrative. I think that's just a legacy narrative. I don't think there's such a thing as an altcoin season. I think there's digital assets and networks that have been regulated and approved for US use and have made their way into the regulatory process. We saw the Genius Act get passed. There are 4 of them. There's Bitcoin, Ethereum, Solana, and XRP. Those are the only ones on the CME group which have regulated futures. Those are the only 4 approved cryptos, only 4 approved blockchains, because they're sufficiently decentralized. They're proven to be completely open source. They've proven maturity. Their teams have been have vetted. Circle and USDT, also what they issue their stable coins on, those are vetted. Those are those 4. Everything else to me is speculative. Okay? We're now moving. It's 2025. We need to grow up. We're moving from a speculative asset into a fundamental asset based on revenue. How these networks and this technology benefit companies and institutions, how they make money using them if they adopt them. We know AI, you can get rid of staff, you can lower your overheads. Crypto is the same thing. If you go into stable coins, your efficiencies now, I'm hearing numbers of 17 to 20% efficiencies just going to stable coins and DLT. So it's all about efficiencies, how companies can make more profits and revenues using blockchain. And, obviously there's the treasury approach, which is more secure upside for your actual treasury of your company. That's another approach. But stable coins, DLT, treasuries, companies are not speculating anymore. They're going with fundamentally proven and regulated networks. So, a lot of this retail pumping of things that aren't used, I don't do it. Okay. If you look at ChainSpect and look at the TPS of blockchains, that's the most important thing, adoption. If something isn't adopted by 2025, it doesn't exist to me. Okay. If you haven't proven yourself by now, you're done. If you look at TPS, Ethereum's doing, let me look at today's number.
15 or less.
20.41. It's not being used. I just came back from Asia. The first question I ask any CTO or CEO, have you used Ethereum? I did not get one yes. Nobody uses it. Okay, it is a speculative asset. Base, they've experimented with. And I've obviously can talk at length about layer 2s. But people don't use these blockchains. They are speculating on use in the future.
Well, that goes to what we said. It's all driven by TradFi. This is TradFi 100%. This is not retail money going into ETH. Some of the retail
powering this market. Trust me, retail are irrelevant. This is an institutionally powered market right now.
Yeah,
all these
and has been
all institutions
since last year. Yeah. Now, I tweeted this last night. Quick poll on AltSeason. Is it on? ETH up 54% of the month. Once again, well done, Mando. Sol up 45% in the month. Do we think AltSeason has begun? Nearly 5,000 people, 72% yes, said it's on. So that is good news. But let's get back to a couple of other quick items that before we can get this out of the way. Again, Novogratz going to 1 million. Novogratz picked up 80,000 Bitcoin from an old wallet, which got a lot of people by surprise. They've also been snacking on a lot of Solana OTC. Is Novogratz having his golden hour right now? I know he went through some stuff way back in the last cycle, which you won't cover here, but what do you think?
Yeah, look, I think Galaxy is actually an interesting vehicle from an equity story too. It's slightly unique in that it does a bit of it's almost like a crypto conglomerate. It does a ton of different things within crypto, and there's not that many publicly listed firms with doing that many different things, I would say. So I think he's probably going to get he's got a good equity story behind him, and he probably has the contacts to be able to do various different things in terms of the leading the crypto to TradFi onboarding move. So I would be unsurprised if Galaxy becomes one of the best. Well, it's already been one of the best crypto equity trades, but I think I like that story. If you know anything about him, like he's been a powerhouse in equity.
In fact, I have a Galaxy position, and I was fascinated because of all their OTC buying of stuff between Solana and Bitcoin. And if you look at their portfolio, it's very impressive. Plus, they got listed in NASDAQ for additional liquidity. And CTO, you can see the chart here today on Galaxy, it's up 16%. So that's on fire.
$31.42, yep. $31.42 right now.
Yeah, and that's a big move for that asset. And then Plan B comes out. And Plan B is kind of quiet, and I know people groan when they hear Plan B, but I must say I'm a big believer in stock to flow, always have been for a long time. But he talks about the gold market cap being 20 trillion, Bitcoin market cap being 2 trillion, but the scarcity is double that for Bitcoin than gold. Gold stock to flow is 60, which means you can double the supply of gold every 60 years. Bitcoin scarcity is 120. In fact, you can't double the supply of Bitcoin. That's over. But if you could, given the current mining rate, it's 120, which is twice scarcer than gold. And he says, in my opinion, Bitcoin is at least 10x undervalued, which makes complete sense. Now, then you have Standard Chartered, which maybe you met with. I think they're all over Asia as well, in South Africa and places like that. Their target for year end is $200,000. So we have lots of crazy bullish stuff between Saylor, Novogratz, Plan B. Are they all like these are all very experienced in the Bitcoin space, CTO? What do you think of all of this stuff coming out now at the same time?
Yeah, I think that's it. What makes Bitcoin unique here is that it's kind of both. It's both a speculative asset, something that you would buy if rates drop and tech stocks pump. And that's how it's always been. But then at the same time now, something else is happening, like fiat and the debt crisis, and there's like an uncertainty in the fiat system and the ability of US government to pay their debts and so on, and how to what if we get hyperinflation, how to secure the money. That has only been a narrative, but I feel now it's becoming a reality. Like people actually start thinking that actually maybe this crazy Bitcoin is maybe a more secure way to hold the money. And so I do think that, which is like the previous gold use case. And both those are still applying. I think there are people buying Bitcoin from a pure bullish speculative perspective. Market's going to pump. Let's buy something that will pump a lot. And I think there's people who genuinely see it as like a risk mitigation. What if we actually get hyperinflation in the US dollar? Maybe we should have some Bitcoin, some gold. And I think both of those are actually happening. And what we talked about many times, like gold is kind of the old thing. Young people are more likely to buy digital gold, buy Bitcoin in that, if they're thinking about that, than the traditional gold. And it's not going to happen overnight, but Bitcoin can definitely go to insane numbers because the fiat could be worth less. So in US dollar, we can come to insane numbers. That can absolutely happen. I think Bitcoin can really challenge gold in terms of market cap. That can also happen. And like Marty talked about before, we haven't even gotten the QE phase yet. So all these things are coming together at the same time. And I think it's realistic. I think these numbers can be met. I don't know how long it takes, but I do think it's definitely possible.
Yeah, I mean, everybody talks about rotations. Just remember, we've been rotating the same liquidity for the last 4 years. So it's just going from one to the other. That if you look at that, you're just going to get stuck in an infinite loop. We're talking about new liquidity. What's happening in new liquidity? New liquidity is coming into the system, and where is it going? It's going into Bitcoin first, and then it's going to go into stablecoin networks. They're going to accumulate stake. Look at Circle. Every 10 minutes, they're buying Solana and Ethereum. Why are they doing that? That's new liquidity coming in, buying stake. This is the new paradigm. This is no longer speculation. Like I said before, what's going to happen the next 10 to 15 years is you're going to see baby boomers dying and all the inheritance, all the wealth, the greatest wealth transfer in the history of the world, move to the millennials. What are they going to do with the money? They're going to sell the gold and buy Bitcoin. They're going to sell the companies they inherit. They're going to do startups. They're going to buy Solana and Ethereum. They're going to do different things with the money. It's all changing. Everything's changing. And I think institutions are front running it. That's it.
Interesting little take here on Bitcoin angles. These are just some random points that people are very concerned about, also excited about. So I'm going to go through this little mixed bag, and I'm going to go to you first, Mando. But the hodl culture, like one of the things that fascinated me since 2017 about Bitcoin is the scarcity. Okay, if every billionaire in the world decides to buy Bitcoin, they can't. They're already boxed out completely. And then the U.S. government strategic reserve, we heard a lot of FUD last week and the week before. They don't have all the Bitcoin, but Donald J. Trump Media just announced that they bought $2 billion of Bitcoin today. Are Trump's sons front-running the strategic Bitcoin reserve? And then the third item is store of value status. With all the Bitcoin being locked away and on-chain activity pretty much dead, does that really matter? Is it a pure store of value? A lot of talk about Bitcoin payments and everything else, but really we're not sure. There was also a report that Gen Z used Bitcoin to pay for stuff. I don't believe that at all. And then fear is creeping in again. This same thing is like quantum computing last month. Now it's, the old wallets that are, haven't moved for 14 years, they're going to be recycled. And that's going to increase the Bitcoin supply again, which could bring the price down. Mando, what do you think of this mixed bag of angles? What do you believe is worth worrying about, or what is good news?
Yeah, I'm not worried about any of these things.
I'm not worried about any of them.
I really like what Marty said at the end, though, just to touch upon that, which is this. You've mentioned it a few times, the great wealth transfer. And I've been thinking a lot about it recently. Is like, actually, there's going to be a lot of destruction in that transfer.
Yes.
If you think about where a lot of boomers hold their assets, let's say it's in real estate and it's in companies, maybe they own businesses or particularly medium to small size businesses, like transfers of those sorts of assets, they have a lot of costs baked into them. Like if you're trying to sell a house, there's often large property taxes. I know in the US it sometimes works slightly differently, but particularly across Europe and most of the world, if you try and do any sort of housing transaction, there's massive taxes. That's already on top of inheritance tax. And then if you try and sell a business, particularly in a distressed way, you're gonna evaporate a lot of value. I think these assets, you have to be aware of like the supply demand dynamic of those assets a little bit. And I do think that alongside just the scariness of what's going to happen with AI that we've spoken about, like how it's going to completely change the world, Bitcoin just becomes just impossible not to invest in. Like exactly. It's the only thing you feel safe at night investing in. So the first two that you mentioned here, which is the store of value and hodl culture, like I don't think that's changing at all. I think people also just the liquidity of it, I think is a big benefit too. So I think this is what I was trying to say at the start of the show. Like, be aware that Bitcoin story is not getting weaker. It's just the altcoin stories are getting stronger. Like Bitcoin can continue to go up to all-time highs here, even if we have this little bit of a mini altcoin season.
Yeah, I like that perspective. And we have to just think about the new entrants, the new liquidity, the new players, and the fact that 60 to 80% of the S&P 500 is going to be dead in 5 years with this AI revolution. They're not equipped for what's coming. And that's a big part of it too. So not only the wealth transfer, but also the change in where people are placing their money, which is fascinating. CTO, any fears from your technology perspective of any of these recycling lost Bitcoin, old wallets?
I read this proposal from Jameson Lopp and company, this one, if I can share 1 second. Yep. Because I did kind of start feeling a slight concern that some old wallets are not secure enough, and it doesn't need to be quantum threat. I mean, quantum threat is one thing, but turns out that there is also poor entropy. Entropy means you call a random function in software. And Martin knows this very well. And then if like it's not seeded correctly, you can start guessing what the next number will be. It's not truly random. It's like it's an algorithm. And if that's not done right, it's not random, and you can start guessing it. This is not This is not quantum stuff. This we've been able to do for 50 years. And some wallets that were generated early, they did have poor entropy. It was like some Android wallet, some others. It's well documented. And then comes the quantum threat. So, but what I was very happy to see is that there are real proposals now, like this one from Jameson Lopp and others, to try to proactively do something about this. And I think this was an excellent proposal to kind of set a time limit to say that for 3 years, 3 years out, you have to start sending to more secure wallet. You have to send your stuff. If you're alive, please send your Bitcoin to a more secure wallet, And then if for some reason you lived in a hut in the forest for X number of years, so you didn't get the memo, or maybe you were in prison or something, they do have a function like later. If you didn't do it in time, you still have a way to kind of unlock your proof that you actually own it and unlock your Bitcoin and send it. So, and they discuss, 3 years for this and 2 years for this and so on and so forth. So there is like a plan to actually do something about this, because I think otherwise that could be a risk. And we can't have a situation where the frozen Bitcoin return into circulation. That would be a disaster for price, guys. Absolutely. That's the only disaster that could happen. That's if like 25% of the total supply of Bitcoin suddenly comes back into circulation. I would run and sell my Bitcoin, and everyone else, price would dump 95-99%. So that situation we can't have. And what I'm delighted to see is that there are actually proactive suggestions to do something about that before that happens, either due to quantum or just legacy style hacks. You just brute force a bad random implementation and get hold of stuff. And I mean, people were worried about that with those 80,000 Bitcoin. Turned out it wasn't because of that, but I think it kind of awakened this thought that let's do something about it before it is too late. And we talked about it here like a half a year ago, that we hope that proposals like this would come out, and here they are starting to come. And I think it's great.
And the Bitcoin devs are the unsung heroes of Bitcoin. People just think Bitcoin runs by itself, but no, there's a lot of maintenance happening behind the scenes as well. So that was that. Let's get into this. Marty, over to you. I thought Schwab only had 8 trillion. Is it 10 trillion now? But that's besides the point. But them coming in, we're seeing the new money from the older firms are now biting the bullet. How big is this?
I love this because I mean I've known Rick for a long time. I've known Novogratz, Jeremy Allaire, Worcester. I've worked with all these guys in the Valley. Rick is a great guy. He gets it. He's been into distributed computing for a long time. He's wanted to get involved. But I think more importantly is that he's coming for Coinbase. Coinbase, we've all been, the biggest fear I've always had in crypto is that Coinbase is a monopoly. And to me, this is a good signal because it means there's competition coming. And, they have the resources, the liquidity, the users, institutional clients. They've been waiting for the Genius Act. And this is just another signal, people. This Genius Act signature on Friday, don't underestimate the effect it's going to have over the next weeks. A lot of people have been waiting on the sidelines for this, for Trump to sign that Genius Act. So this is your first signal right here. Schwab is coming in. They're going to do crypto trading, spot trading, make platforms. It's all happening. As in my opinion, Worcester is a great guy. He's going to do it right. I'm pretty comfortable with this. I like it.
Yeah, and in fact, related to this, we're seeing TradFi encroaching on crypto, and we're seeing crypto planning to encroach on TradFi. There was a very interesting video with the CEO of Wintermute on Pomp. And that was fascinating to hear their plans. They're going after the aggregators, what's the name, the Citadels of the world, and those types of players to also manipulate markets in traditional finance.
Yeah, Pump's been interviewing the big manipulators, CZ and then Wintermute. Wow.
Exactly. Yeah. Well, it makes for good TV.
Pump, actually.
Yeah, but this was, I think this was super interesting for us to be aware of, because this ties into this next point, and this is probably very important. When you look at the amount of perpetual Dexs volume happening in crypto right now, this has definitely got the attention of the BlackRocks and the Schwabs and the Fidelities, probably the Coinbases and others. Mando, I see a little wry smile from you there. These things are insane. The volumes that they do, these tiny little, like for example, Drift does nearly $1 billion in perp volume. It's $150 million market cap, and it does more perp volume than Ethereum chain, but it trades at like 4,600, the market cap of it. How do you reconcile this in your head? Hyperliquid, you know, is a beast, and they're high frequency traders that have come over to crypto. We have Wintermute, high frequency trader owning crypto and all the market making, now planning to go over and go after Citadel. This is just, as a TradFi person, your mind must be on fire right now, because I know mine is.
Yeah, it's going to be interesting to see what TradFi does with this, actually. Like, do they decide to continue down the route of like a centralized style exchange and do their own perps, but more like Binance, or do they go down the Hyperliquid route and become, more like a Dexs where you're just matching buyers and sellers a bit more? I think there's value in both. It's clear that, and with some of the rules even that came in last week, there is going to be certain regulations around what you can do with perps in the US. And I don't think some of the regulations even last week were that positive for DeFi. So maybe I think that they're setting the stage for them to set up more like centralized exchanges, more like Coinbase competitors rather than Hyperliquid competitors. But that doesn't mean that these can't flourish, particularly outside of the US. I think they're an interesting trade. I think perps as a product can now start to be attached to more and more assets. And then the sky can really be the limit for a lot of this stuff. So I think it's an interesting space. I think it's only going to grow. I don't know how the market structure is going to change, let's say, as it grows, though. Like, I'm not too sure if like Drift, which is, I would still say it's the second biggest, like it's more of a seen as like a second tier perp trading platform on Solana to Jupiter. Like maybe that continues to have really good market share, or maybe some other big behemoth comes through and goes like, hey, well, we're going to create a perp product and take even more market share. So I think it's still difficult to know.
Well, Drift volume is 10x in the last 3 months or so. So it's going vertical. Jupiter is kind of steady Eddie. Hyperliquid going vertical. It's as if, and when you come at it from a user experience, and Marty, maybe for you, it's actually easier. It's easier to perp something on these chains than it is to buy spot on other chains. Riddle me that, Marty.
Well, I mean, understanding I'm in a community of traders, okay, big traders, ex-prop trading guys, hundreds of millions. They prefer decentralized positions because it comes with the security of the chain. When you're trading $200 at 50x, it's fine to do it on a centralized exchange. If the exchange goes down, or if there's some issue and they say sorry due to market volatility, you've been liquidated, you lose a couple of bucks. But when you're dealing with $100 million, you're not going to deal with that. You want to go on chain. So I think there's always going to be a home for decentralized perps. They're more like long-term positions, actually, at low leverage. That's really the model. So they're like 1.5 to 3.8x instead of spot, just like James said, which is the way TradFi works, guys. That's gold. The entire gold market is low leverage longs on paper gold. It's not actual physical gold. So we're moving to the same model as TradFi. I just think we have a new technology now called decentralized perpetuals. And I think they're going to be huge. My biggest concern is the non-canonical tokens. Hyperliquid. When you trade on Hyperliquid, you're trading against a derivative. Hyperliquid is just a bridge centralized thing. They only have hype on their chain. Everything else is a derivative. They don't have any native Bitcoin or Solana or Ethereum. It's all bridged through their partner company. And that's, always going to hold risk. And so large traders, that's the biggest concern. They say to me all the time, Marty, what happens if that, if Hyperliquid's bridge gets exploited? What happens to my position? You lose it, okay? So you have to be very careful of that. So it's all about canonical tokens. That's the next wave coming into 2026. It's all about MPC, multi-processor computing, so that the actual tokens are not bridged with some kind of security. Remember, the Clarity Act coming out is going to put its foot down. If you have a bridge where you have a derivative on, let's say, Base that's backed by wallets on Bitcoin, the Clarity Act is going to say, well, that's a security. You need to register that as a security. And people aren't aware of that, okay? The Clarity Act, there may be seen as a big bullish moment, but it's going to bring, like Mando just said, a huge amount of regulatory sweep across the whole industry. And a lot of these sort of derivatives and, non-canonical tokens are going to come under scrutiny. Doesn't mean they're dead. And a lot of people always go, oh, security, dump it. Doesn't mean it's dead. It just means they're going to have to disclose. So BTC, for example, is going to have to disclose. When you buy this, it's not Bitcoin. It is a security which we are honoring through this disclosure, okay? So things like that. So I think people need to understand that the Clarity Act probably is going to be the most consequential act to eliminating zombie chains and zombie tokens. I mean, I think we should talk about that because, there's a lot of...
This is something that I wanted to talk to you about. Because it feels as though a lot of people saw the Genius Act get passed, but this Clarity Act is definitely the bigger of the two.
Yep,
well,
absolutely.
Well, it's like it's got an impact, which I think people would have thought, oh, it's great that all these things are getting through the House. Like, this Clarity Act basically was a shot across the bow towards DeFi. It's going to put in massive listing procedures for all of DeFi. And of what Marty said, it's going to have to be things around custody as well of different assets, which is going to be important. Like, this is not a good thing for DeFi in the US, what came through with the Clarity Act. In fact, Hyperliquid, Uniswap, all these big DeFi protocols will not be happy, and were vocally not happy about it going through. So let's see what happens there. It was a bit of regulatory capture there by Coinbase.
I think that a lot of chains that are very speculative and have low TPS, low adoption, but high market caps are going to have to now prove to through the regulators, if they want to be listed on the CME, are you sufficiently decentralized? Who is your team? You're going to have to KYC and docs. And we're going to see elimination of a lot of these down. We've always said there will be a moment of reckoning where a lot of the sort of zombie coins get eliminated from the market. I think the Clarity Act is really the act that's going to start that. A lot of these chains are going to have to cough up the reality, not just the marketing bullshit. Where are you? Where are your servers? How many nodes do you have? Are you decentralized? Are you open source? And if they're not, they're going to have to disclose, and a lot of them are going to lose value. So
it was regulatory capture there by Coinbase, and I think some of the major backers of like ETH and probably Solana. Like this, it really does narrow the field, the Clarity Act, of what can be done.
100%.
Yeah, and I know, CTO, it's not in your neck of the woods, the Clarity Act, etc. But what do you make of all of this right now?
I mean, I think some things may be good, like bridges, for example. They are inherently super risky. There's been a lot of hacks, but somehow people forget it each time how risky it is.
Yeah.
Another thing that I wanted to touch on, something important that Marty said, that we're moving more to a decentralized world and that many people actually prefer it. I think there's one more reason also, and that is that what some of these bankruptcies showed in 2022 was that there can be clawbacks. So for a traditional spot exchange, if you just transfer in your money and you're very careful, you transfer in the money, you do the exchange, and you immediately withdraw the funds because you know that bank exchanges can go bankrupt, so you kind of try to mitigate that. And then you continue trading with that. Then they could come like 1 year later and say that, no, actually, we want that money back that you withdrew. which is crazy in a way, and it's not the norm of traditional finance. That doesn't happen in traditional finance, but clearly it could be done in crypto. And I know a lot of people took notice of that and kind of increased the risk, the riskiness of using a traditional spot exchange because of that. Like even if you are careful and withdraw the money, you can still get caught in their bankruptcy if that happens again. And if that will never happen again and so on, but it's like, what is it? It's 2 months ago that Bybit was hacked for $1.4 billion by accident. Someone accidentally, signed a ledger transaction, and then both biggest heist in human history went out. So
remember,
these things can happen. It doesn't have to be like malicious intent. It can be just an accident. Some person who signed the wrong transaction or something, and boom, there it went. That doesn't happen in that way in DeFi. Of course, there can be other problems in DeFi. It can be a bug instead or something like that. But at least, you can maybe mitigate that risk better in many ways if it's the right kind of DeFi. So I think that is important. I'm not I absolutely hate these regulations that try to kind of limit creativity and try to limit innovation in order to protect some legacy. It used to be like the bankers who did that to try to shut down the whole crypto. Now that didn't work. That era is over. Now the US, the biggest, most powerful country in the world, is all in crypto. So now I think that narrative is over. Now instead, then crypto companies try to, shut down DeFi instead to try to capture something with regulatory means. I don't think it's good. I don't think it's.
In my opinion, CTO, I think the Clarity Act follows MiCA, right? It's very similar to MiCA. It's going to take a lot from MiCA. So you guys know in Europe what the effect of MiCA. I think the Clarity Act is the same thing. It's actually bullish, in my opinion. It's bullish because it legitimizes, like Mando says, it's going to narrow the field into legitimized, regulated blockchains and the associated networks. It's going to force bridges and anything risky in the centralized world to disclose, regulate, and create legally binding insurances about their derivatives. And it's going to eliminate zombie things, which have been just farces from the beginning. Low adoption, high market cap chains. Like, what's going on? Why?
I'm just worried that it accidentally also limits. I'm just worried that it also accidentally limits like the next innovation. The thing that like the new innovation always is somehow disruptive and barely permitted. That's like the very nature of innovation, as we all know here. And I'm just worried that this kind of regulation stops it, so that like that one never gets off the ground. That would have become the next, Uniswap or whatever.
I think what it does. It's kind of what we needed, which is what Marty said. What it's basically going to be like if you create a meme coin like Trump did, for example, or thousands of other meme coins, you could like list them under a certain class of token. But if you've got like more of a coin related to the operations of a business, that's like a different sort of listing process. All it really does is add costs. It adds costs, particularly to DeFi protocols, to follow the right sort of procedures when it comes to listing these sort of things, which is why it's a bit of regulatory capture. Because when they start adding costs to DeFi, the centralized exchanges and probably TradFi are going to win when it comes to the ability to like follow some of the regulations. So I don't know if it's at the scale of like limiting innovation as such, but it's definitely going to make it more of a oligopoly, let's put it that way, of a certain few number of big firms which dominate, of which we just spoke about. Drift may be up there and win, but like if this regulation forces another 100 million of costs to Drift to operate in the US, they're either going to, one, not operate in the US, or the number two, they're going to face an issue on their like margins versus some of these other businesses and might look to consolidate.
The most exciting thing I heard on my trip is the excitement around the Clarity Act introducing the notion of a regulated ICO. Just remember, this is going to create security tokens, the thing we all started in, the early days, which was supposed to be the next big thing that got stifled by Gary Gensler, set us back 5 years. That means a company, if you make a company with a board and a business plan, Instead of going public through a shell company on the stock market or listing on the NASDAQ, you can make a registered token from, you don't need a stock. So, and I think that's going to really boom. It's going to create an economic boom. There's going to be so many new companies, so many new projects, so much new innovation around that notion to get global capital to fund them in a regulated way. I think people underestimate these new internet capital markets that are coming. I think it's
having David Sachs in the White House on the cabinet is probably the most important role, because he understands both AI and crypto. And he has the ear of the US president. And just like you said, Marty, they want to create innovation. They want the US to be the global leader, not only in AI, but also in crypto, which also happen to be the only two narratives I invest in. So it's could not be better. People have another question. All right. With all the gains they're making in crypto, this bull run, do any of you advise, that's the multi-million-dollar question, that they should flip their crypto gains into tokenized AI stocks? A lot of people don't have access to a traditional brokerage firm, but now they've got an avenue to buy stocks, tokenized versions, like Tesla, Nvidia, etc., for the AI bull run, which is only just beginning. The investments made in AI are absolutely insane. All you have to do is look at the Nvidia price, biggest company in the world by far right now. CTO, I'm going to give this one to you first. Yes or no? Would you recommend this in a financial advice way or not?
I cannot advise anyone what to do with their investments. So nice try though. But I think one thing that is absolutely key is to understand one thing. Like, if you can instead of putting all your money in one asset, if you can put the money in two assets instead, which are both good, similarly good investments, and they're not completely correlated. Mathematically, you have a higher chance, you have a better outcome over time if you can diversify into multiple good things. If you diversify into one good thing and one bad thing, that does not improve the outcome, right? But I think crypto and AI are both two key narratives here that are not going to go away. We have said it for a long time. These are not hypes. Like, blockchain technology is a fundamental, computer science discovery. And AI is not going to become useless tomorrow. We're all going to keep using it. So these are two narratives that are amazing. And I mean, just looking at Zuckerberg, I don't know if it's true. I just read it on X
it's true.
Today. Did he pay $1 billion for a guy to come and work 4 years?
300 million.
Yeah. So
at least, yeah.
I read 1 billion today. I don't know if it's true or not, but insane amount of money. So smart people in the tech space, like Zuckerberg, who has done very well for himself, clearly thinks that it's worth investing in this field. So, why not do both? Why not have a little bit of AI exposure, some crypto exposure to some Bitcoin? There's a lot of opportunities here. Why not go for
little correction there? So Zuckerberg said he's going to invest $100 billion in a data center, first of all, and they've fired their existing AI team because they did have an AI play, but it failed. And he got very upset. He fired everybody. And he just hired, some of the top people from ChatGPT and other places. And 44 folks came over. I think 75% of them are Chinese, and they're all getting between $10 million and $100 million a year, including this one guy for $300 million. So he's basically throwing the kitchen sink at AI. AI is massive, as we've been saying here since day one, but it's now like literally an arms race for big tech, because as usual, winner takes most. With everything in the world, there aren't 10 winners. There's one that takes 80% every single time. No ifs, ands, or buts. So you're right, CTO. It's crazy time, and everybody needs that diversification and exposure, for sure. And I do believe
I've been buying a ton of X stocks, Tesla and Nvidia X stocks. All the money that I make now, I just keep buying them. Tokenized.
Oh, can you tell people, there's a question here in the audience, Marty, a quick way to buy tokenized stocks?
Yeah, man, you can just buy X stocks. Just go on any Solana, Dexs, and buy Tesla X, Nvidia X. simple. Takes 1 second, and you can exit in 1 second.
Yeah.
Back to stablecoin.
And a lot of people complain maybe there's not enough liquidity, or is there any danger?
Look, I don't have fear. If people are out there with fear, it's because they've been fear-mongered. No, there's no liquidity problems.
Okay. Mando, are you YOLOing into X stocks on the side?
I don't have fear.
No, you can go look at disclosures.
That's
Go
the
look
line
at
I'm
their
taking away
disclosures.
from
It's all there. It's highly disclosed. X stocks is extremely well constructed. Go have a look at the website.
Yeah.
I mean,
It's
all custodian through BNY Mellon. I mean, does BNY Mellon have liquidity, guys? Come on. You need to learn to read disclosures out there, listeners. Yeah. Learn to do your own research. Don't just invest blindly in anything we say. Go to the place, read the disclosures, learn about it. Get your own perspective.
And don't believe anything on CNBS either. That's for sure. We're going to do a quick fire round now. There's a couple of things that we need to get out of the way. And hold on a second. Wrong slide. Where is it? This one. A lot of people, I get this a lot. They've made it to Wholecoiner status. They got one whole Bitcoin. In preparation for the bear, if there is a bear, should they trim some of their position or just hold on to that very special one Bitcoin, considering Saylor says it's going to a 30 million target? This is a quick yes or no: trim, rotate, hedge. What would you do, Mando? Or what would you advise people to do? They're concerned.
There's become like I've seen it a bit more on the timeline, which is like you don't need a whole Bitcoin now. You just need 0.1 Bitcoin. I don't believe in that. I think if you're looking for a trade, you need to at least own one Bitcoin. At least own one Bitcoin. So if you've got it, hold on to it. Don't think that, I can get away with owning less. I think I'm a big believer that don't just think you can own a tenth of the position and think it's going to have the same risk profile. I think keep a Bitcoin if you have it.
Exactly. Remember, 8 billion people, only 15 million Bitcoin. And when you remove everything that's been taken by Saylor and others, forget about it. Very little out there. Marty, trim or hold?
Look, I just do my own personal strategy, which is, remember, I'm 55 years old, so I'm in a different position from someone in their 20s or 30s. I've got another 15, 20 good years left. So, in my opinion, I'm going to follow global liquidity. I'm going to take my first profits at the 140 to 150 range, and then obviously hold the majority of my Bitcoin until, to me, gets to maturity, which is at the top of quantitative easing. And I think that's in the second quarter of 2026.
Does that mean selling 20% or selling 40%?
In 2026 at the top of QE, I will exit fully to stablecoin.
Oh, wow. Go to cash. Yeah. Okay, interesting. CTO, what would you... I know you can't give advice.
I'm a big fan of diversifying holdings. So it depends here, like if the prospective Wholecoiner, if that's all the money they have, or if it's like 0.1% of the money they have. I think that if it's like 1%, they should probably increase. If they're planning to live off this money and that's the only money they have and they've already retired, it's very difficult to stick to that strategy if Bitcoin drops 50% then, in the next bear market. Then, maybe they should have diversified it a bit. So I think diversification is the winner because it becomes easier to stick to your own plan. If your plan is to hodl or trade it in uptrends or whatever it is, I would suggest some diversification.
Awesome. Good stuff. And then the very final, a little bit of quick fire. I try to pack as much into every show as possible. There's a question that came up, which I hear a lot. A lot of people know it's extremely difficult for new graduates out of university to get a job today. 68% are on the market for at least a year before they find a job. And that is way worse than any other time in history. We know companies, especially white-collar jobs, they're not hiring new graduates. They're finding ways to use AI to do that type of work. Now, a lot of people know that, for example, AI stock like Tesla could do very well. Would you, as difficult one, invest $100,000 in Tesla or invest $100,000 on a child's education? Because just like a whole coin or a whole Bitcoin, what's going to be worth more in the future? What will generate the best return on investment? I know people who know me know the way I think. I think college, the syllabuses have not caught up with the way the world works today. But Mando, this one to you first. I know you've got kids.
I actually found my time at college like incredibly good for my own development, both from an academic side and from a social side. But that being said, I do question how a college degree even works in the world of AI. Like, there's just too many shortcuts, and I think it's reading a lot of takes about this. Just like, I think social skills become far more important, and that's a range of different skills, whether it comes to like more business-like social skills like negotiating, than it is just around like academic prowess. Let's put it that way, because I think people are able to level the playing field there much easier than some other measures. So they always say, you know, when you have a liability coming up, you have to pay for it with an asset. So maybe you could look at it that way, that you invest in Tesla stock now, or you invest in something that is perceived to be an asset for a future college degree, and you pay for it by the time it comes due. But look, I would massively question the course and how the course is being both in terms of content and how it's being taught with what someone would get from a college degree going forward.
I love that delayed gratification. That's an actually genius move. Pause the investment in college for 5 years, make the money in the markets, then invest later. In the meantime, get some real live intern experience. CTO, and I'm going to give this one to you next, because I know you think a lot about this too. And we know that we have technically with Grok 4 ASI, everybody for pennies has an army of global PhDs at their fingertips. So it doesn't make sense to go to college to learn anymore, because all the knowledge is out there on the planet already. How do you view this?
Yeah, I thought a lot about this also. Same like Mando said, I felt for my own life, it was critical. Like the period in college, university, it was critical for me, for my own success that came later. But I think that it wasn't the learnings. The stuff I learned, you know, it was useful. I studied computer science early. It started in 1992. So, of course, that was useful skills. But it wasn't that. It wasn't the learnings that propelled me forward. It was that I think you practice to think. You practice to learn. You practice to interact with other similar people. And thinking today then, where a lot of the knowledge has become completely useless. Any fact you can learn is almost no value. Any basic skill is of no value. So I think that the knowledge that you will get out of the college isn't worth anything. But practicing your brain is, like trying to think about complicated problems and trying to solve them, and challenging yourself intellectually, trying to learn difficult things. That is valuable, and I think that will remain valuable. But then if you do that in a formal college degree, or if you can figure out some other way to do that, I do think that is valuable. That is more valuable than staying at home and scrolling TikTok for 4 years or something. You know,
Look, I think
your brain will rot then instead of expand. And I think that is the thing to look for here. And then perhaps as an individual, do you feel like you need a structured way? Okay, go to college, forget about the knowledge, but practice your brain. Try to really try to go the furthest, take the hardest courses, read the most difficult books, try to expand your brain as far as you can, to challenge yourself. That I think will remain valuable.
And to meet people, right? Like college is as useful as it is that society deems it useful. But like Facebook started at college, Google, I'm pretty sure Larry Page and Sergey Brin met at college. I'm pretty sure Bill Gates met Paul Allen at college. Like most of these companies are started, or a lot of, I think Apple even, like Wozniak met his, loads of top companies have been started by people who met at college and then decided to either quit when they were at college. So like, I think the social side of stuff is actually important.
And Zuckerberg stole Facebook idea at college too. Don't forget that.
Exactly. You can steal great ideas at college.
Yeah. So it's a very difficult situation. A lot of comments here. In different parts of the world, it's free or a lot cheaper than the US. Marty, you've been around the world.
You should have your child's IQ tested at a very young age. If they have a high IQ, send them to college. If they don't, get them into a trade. Plumbing, electricians, it's a great paying job. Doesn't take high IQ, can't replace it with AI. It's a very safe career. They'll be a happy life. They'll fish on the weekend. They'll be great.
Yeah.
If they want to be a lawyer or a doctor, obviously they got to go to college. We need doctors. It's a great profession. We need lawyers. AI ain't going to replace those things either. So there are a lot of reasons to send your kid to college. But if they've got a low IQ, they're not going to get anything out of it. They're going to study some useless thing, come out in debt, and you're going to have to pay their minimum payments for the rest of your life. And then the other thing is, we still haven't spoken about it. What happens when AI removes pretty much every low IQ job in the world? Well, maybe parents will have more time to actually raise their children at home. So I think, education has become daycare, especially in the USA. That you send your kids to school and college because you don't have the time to raise them. And so they'll end up getting raised in college, which is, who knows, we've just gone through a horrible period of college. So I think maybe AI might make a new era of parenting. So I'm pretty optimistic about that.
I disagree with you on law. Lawyers are being impacted big time, and HR as well, and lots of other. My take is simple, though. If you do have kids, or even if you are somebody thinking about a change in direction, first thing you do is not an IQ test, but an aptitude test. Find out what your brain is good at, and you might be very surprised with the result. Second thing, map that to things that you love doing. If you love what you do, you'll never work a day in your life. And then go search. That is key, and leverage AI as much as possible. But I think the days of college, again, it's great to be social, but you can also send your kid down to Starbucks and have them talk to people there and learn social skills there. So it's a tricky hot potato.
It is a hot potato.
I think the great thing is that there are more opportunities to acquire these skills than ever before. Privilege will be much less. Like, it's not that people will be locked out from acquiring these skills unless your dad is rich or something like that. So I think it's more opportunities for everyone than ever.
One final thought on that, CTO, is my spaces that I've been doing every day for 4 years. I've made more friends. People have connected, done business together. So it replaces college. I think the metaverse is definitely an IRL substitute for college. There will be Spaces education. There will be Spaces college. I think it's coming. You don't even need video. You just need audio. If you want to learn and you hear the things you want to hear, you will learn them. And the internet and AI, the resources are all there. There's no excuses not to learn. If you want to learn something as a kid right now, it's never been a better time to learn. I mean, if you want to learn something right now, within 4 hours, you will know it. In college, it'll take you 3 months. That's how fast it is. Do you need college? I don't think so. If you want to learn, you don't need college. If you need a degree...
We're facing the biggest industrial revolution in the history of the world, and that's AI. Everybody, for free, now has the world's intelligence at their fingertips. 100%. Think about that carefully. The world is changing very fast, and position yourself for it. And by the way, even if you're in college or if you're 55 or whatever age you are, it's never too late to pivot and do something different. I sat with a former Time magazine editor, sat with him for 3 hours, a journalist, 90 years of age, been through the Vietnam War and everything else. The stories from him were unbelievable about life and positioning yourself correctly and trying new things. It was just amazing. I'll do a little write-up on that experience. But he had a very interesting concept as well called drift. And that is, you need to drift, go to where the action is, even if it means being a journalist in the Vietnam War or whatever. Go to crypto, go to AI, drift. Don't feel locked in one place. And that was the big takeaway. Love you guys. Thank you so much for coming. Don't forget.
Can I just say thank you to James, guys, for putting this together. This show has become extremely meaningful for people. Mando and CTO, I think we've got a great thing going here. I love you guys. Let's keep going. Everybody that listens, just spread it with anyone you know, because this is really key information. We're touching on crypto and macro, but really we're touching on life. I mean, we're just a bunch of young guys. We're very, very tapped in, and we're here to share it here on the metaverse with you. So thank you, James, for putting it together.
The metaverse. I hate that term.
Huge thanks, James.
Thank you,
everyone,
guys.
On the scene,
links
James
for this team. as
James
well.
works tirelessly on this, prepares agenda points every single week, and makes this possible.
James, I was in Asia
enjoyed
working
Mandus a
for
lot.
Asians, and they knew you. They knew you, James.
Oh wow, interesting.
They know you.
Even if
You
there
are
was no
fabulous.
one watching, if there was not a single person watching, I would come here every single Monday because I learn a lot from the three of you. I always live with new perspectives, and I absolutely love it. So, thank you, James, for putting this together, and for
Thank you, James, for
Ando
putting it
and
together.
Marty for your great perspective.
We
you guys.
all learn, we all drift. All right. Thank you, Mando. Thank you, Marty. Thank you, CTO. You guys rock. And thank you to everybody in the audience and the mods. And don't forget, links below for everybody as well. Follow these gurus. Ciao.
Thanks a lot, guys.
Yep.